Hi everyone, this is Amy from Premia TNC. In this video, I would like to share some information in regards to the differences between Singapore subsidies and Singapore branch in terms of their legal status, annual statutory filing requirement, and income tax rules and regulations. Here, you can see the tables of comparison for legal status, entity name and service, as well as business activity. Under the legal status, a Singapore subsidies is a locally incorporated company which can be 100% owned by foreign individual and corporate. It is separate legal entity from its members and directors. Members have limited liability. For Singapore branch, it is the same entity as the parent company, head office, which is incorporated outside Singapore. Branch is not a separate entity, but only an extension of its head office. Any actions against a branch is tantamount to an actions against the head office. Entity name and service. The choice of name of a Singapore subsidies is subject to approval by the Accounting and Corporate Regulatory Authority, ACRA. The company service is PTE Ltd or PTE Limited. As for Singapore branch, the name of the Singapore branch office is required to be the same as the head office and needs to obtain an approval from ACRA before registration. The branch service is Singapore branch. In terms of business activities, Singapore subsidiary can conduct all business activities as registered. The nature and extent of a Singapore subsidiary activities are governed by its constitution, commonly known as MAAA. For Singapore branch, it must be the same business as the head office. The activities of a branch are governed by the memorandums and articles of associate, MAAA, and or by law of the head office. Let us move on to the next comparison table. Under the officers, Singapore's subsidiary must have at least one director who must be ordinarily resident in Singapore. A Singapore citizen, a permanent resident of Singapore, or an expatriate holding a valid employment pass may act as the resident director. For Singapore branch, it is required to have at least one local authorized representative and a registered office in Singapore. Shareholders. A Singapore subsidiary may be incorporated with only one shareholder who can be the individual or company. There is no requirement for shareholders to be resident in Singapore. Singapore branch is depending on the constitution or MAAA of the head office. In regards to the statutory registers, a Singapore subsidiary is required to keep certain statutory registers and minutes books under the Company Act Cap 50. For Singapore branch, it is advisable to keep all the statutory registers and minutes books in the register office in Singapore. The four types under this table is register office. A Singapore subsidiary and Singapore branch both must have a local register office. Our next comparison table will talk about company financial report, annual general meeting, and due date to lodge the annual return. Under the company financial report, a Singapore subsidiary is required to prepare the audited or unaudited financial report and to lodge the annual return through ACRA on annual basis. Audited financial report can be exempted if the company meet the criteria for small company audit exemption. A Singapore branch must file with ACRA annually with the head office accounts as well as its own audited accounts relating to its operation in Singapore. Annual general meeting. A Singapore subsidiary is required to hold an annual general meeting AGM within 6 months after the financial year end. As for Singapore branch, the requirement to hold AGM depends on the head office whether the loss is indicated. In terms of due date to lodge the annual return, Singapore subsidiary is required to lodge the annual return within 7 months with the completed financial report after the financial year ended. Whereas the branch is required to submit the audited financial report of Singapore branch and the financial report of the head office within 60 days after the AGM of the parent company. Further, if the parent company is not required by the law of the place of its incorporation or origin to hold an AGM and prepare financial accounts, it must still prepare and file audited financial accounts within 5 months if listed or 7 months if not listed from its last financial year end. Now we come to the last comparison table, which I would like to share the information in regards to the income tax return. In terms of tax residency, Singapore subsidiary is determined by where the business is controlled and managed. For Singapore branch, it is not a tax resident company as is controlled and managed by foreign parent company. Tax filing. Both Singapore subsidiary and Singapore branch is required to file estimated chargeable income ECI within 3 months from company financial year end. However, when come to actual tax return, which due by 30th November every year, tax returns form to be used by Singapore subsidiary is either Form C or Form CS or Form CS Lite. For Singapore branch, only Form C can be used. Lastly, on the tax exemption. Full tax exemption will be given to Singapore subsidiary if meet the qualifying criteria. Full tax exemption refers to 75% exemption on the first $100,000 of normal chargeable income and further 50% exemption on the next $100,000 of normal chargeable income. The qualifying criteria refer to be incorporated in Singapore, be a tax resident of Singapore for that YA, have its total share capital beneficially held directly by no more than 20 shareholders throughout the basis period for that YA, where at least one shareholder is an individual holding at least 10% of the issue of ordinary share of the company. As for Singapore branch, only partial tax exemption is given where 75% exemptions on the first $10,000 of normal chargeable income and a further 50% exemption on the next $190,000 of normal chargeable income. We hope this video can help you to understand more about the differences between Singapore subsidiary and Singapore branch. We are Premia TNC and thank you for your watching.